The views discussed in this conversation are the views of individuals and not of Arrington Capital. This podcast is provided solely for informational purposes and is not financial, legal, tax, or investment advice. The participants of this podcast are not recommending any particular security, protocol, token, financial instrument, or other tradable asset or any investment strategy. It is not offering to sell or soliciting to buy any security or asset.
Hi, everyone. Welcome back to the Pirate Pod from Arrington Capital. Keli Callahan here. I'm excited. We have a slightly different format than we usually do. Normally, I have the privilege of interviewing our founders, companies that we've invested in, companies that we've collaborated with. And instead today, I'm excited to have Colton Conley here. Colton has been with the fund for a couple of years now, and it has been a blast working and learning from him. He brings a different perspective, which we'll get into. But as of today, we have promoted Colton to a partner at the fund. And so I wanted to take a few minutes to just let Colton talk a little bit about himself, his background, what he's done at the fund, what he's been really excited about, and where he sees the back half of this year going. So Colton, first of all, congratulations.
Thank you, Keli. Appreciate the intro.
Can you talk to us a little bit about your path? You started in TradFi, you went to DeFi. Tell us a little bit about your background and how you ended up here with us.
Sure. So like you said, I started out my career in TradFi. I did quant trading at Citadel. And while I was doing that, I was spending basically all of my free time doing crypto. And it got to the point where it made sense for me to hop into that full time. I wanted to do a DeFi protocol since coming from a finance background, that's the most relevant and applicable thing, and the thing that I had the most hands-on experience with as well. And so I started Prime Protocol, and Arrington was first investor in that. I absolutely loved working with Mike, with Keli, and with the whole team. So once it made sense to transition over to Arrington a bit later, I jumped at the opportunity. And now I've been at the funds for a couple of years now. It's been an absolute blast working on all of the venture stuff with you and with Mike and with the whole team. So TradFi to DeFi founder to VC and sitting on the other side of the table.
If you could have gone back and done it again, would you have done TradFi for a little stint, or would you have skipped that entirely and dove right in?
I actually think I would do the same thing over again. I go back and forth on it because I think the environment that I raised in 2022, while it was still just an insane time, Q3 of 2021 was like the peak of everything. And so that would have been an interesting time to be fundraising as a founder. But I think that having sort of demonstrated that I could get a real like brand's name job helps a lot with credibility. And not everybody makes it back full time to that job. And so I think it was a valuable experience. I also really valued the experience of having worked at a larger firm, even if it was just for a very short period of time, because Arrington is much smaller, doing a startup is much smaller, and it helps me appreciate the differences as well between like a larger firm and a smaller one, and all of the ways in which you can be more nimble and get more responsibility at a smaller place. So I think it also just gives me a lot of appreciation for the seat I'm in now and the opportunities I've had since then. So I'm actually really glad I did it.
You just mentioned the funding environment when you were raising money. Being there back then and being here now, how would you describe the fundraising environment right now today? We're sitting at almost June 2025.
It's definitely different than it was in the beginning of 2022 and end of 2021. I think the market's in a weird place because it looks like everything's set up to really start running again. There's a lot of ingredients in place at a macro level and also just at a tech breakthrough level, and how many things are possible now with things like AI, that there's a lot of opportunity to be had in venture. The difference is that the money is not flowing quite as freely as it was end of 2021, beginning of 2022. I think many VCs have less money than they did back then to deploy, and a lot of them are trying to raise funds right now. So if you're a founder going out to raise, it's this interesting conundrum where you might be onto something fantastic, but the market is still a little softer than it would be in typically in the middle of a bull run. And so I think it's a bit of a mixed bag. There are some projects that are having a ton of success raising, but it definitely takes a bit more work than people would have had to put into it if they were raising even at the same time last year. Last year it was pretty frothy, especially like March, April timeframe.
With your background as a founder and having raised capital before, and I want to move on to kind of what we're looking at and what gets you excited, but do you think it makes it harder or easier on how you diligence founders and projects having been in that seat before yourself?
I think it definitely changes my perspective. It definitely doesn't make it harder. I mean, I feel bad saying no because I relate with what people are going through on the other side. But ultimately, we can only make so many investments, and that's just the nature of the game. I think the thing that being a founder gives me a lot of perspective on just like small anecdotal things, like when people are giving projections about how much the product is going to grow and you really dig into that. Like everybody does this where they give the most rosy projections ever. And so I think it gives me a little bit more skepticism in some ways because I'm like, okay, I see what's going on here. And I also think when a lot of times founders will try and play up this idea of there's a bidding war going on, we have all of this interest. A lot of times that can be embellished. And I think having been on the other side and sort of seeing how hard it is to get to first term sheet and then how easy it is after that gives me, appreciation and more perspective for the kinds of dynamics you're facing, whether it's going to be hard to get into a round or easier to get into a round and all of the things that come along with that. So I think those are some things that being a founder gives me perspective on. And then the last thing would be understanding timelines that companies give you. Having actually built and shipped a product before, seeing where I got stuck personally and the things that happened faster than I expected, I think also helps me with evaluating those kinds of claims because founders are really all over the place there. Some are too conservative with their timelines because they want to underpromise and overdeliver. And some are really aggressive with their timelines, and you look at it and it's just like, there's no way that's going to happen. So I think you get a bit of both. And having sat in the seat before, it gives me some perspective to evaluate that.
Do you think that there's metrics that are more important than others that you'd put more weight in because they're more credible or believable over some of the others that you see?
Yes. And I think it depends on what kind of project as well. One of the things I'm really skeptical of are things like number of transactions on testnet, even number of transactions on mainnet initially. It's very easy to pump those numbers up without having actual sustainable usage. And so I think the thing that's really hard to fake is quality users. And depending on your project, that's going to differ. Like if it's DeFi, that's going to be number of whales that you have. If it's like a social application, it's going to be number of people who are coming back regularly and posting like quality content that's actually getting views. Having a bunch of people who are posting random things but there's no views, that's easy to bot. And I think even things like revenue, you have to go in and look at how much did you pay for that revenue and how much of it is being distributed back to somebody. If it's a DeFi protocol, are you paying all of that out to your LPs? And did you have to use some token incentive or points program in order to get that to where it was? And so I think that's a lot of what's going on in crypto right now is people are starting to look for where's the fundamental traction in these projects. And some of them do have fantastic fundamental traction, but some have found ways to inflate it short term, and you sort of have to tease that out.
And they're doing that in the guise of we have an up round, we have a new round. That being said, about what gets you going when it comes to metrics versus not, what gets you excited when you hear a new pitch? Like what makes a good pitch right now in this market?
Well, the most important thing is that you really like the founders and that they have a compelling background and there's a reason why they're doing what they're doing and that they're passionate about what they're building. And I think this is something that I have come to believe even more so working with Mike and working at Arrington is that does make the biggest difference. It's more important than the idea and it's more important than the market size. those are the other two things that matter is, really large market with a large TAM, especially early on. You want to find something that has the potential to get big. And ideally, it's something innovative and something new. But neither of those things matter if you don't have good execution. And it also doesn't matter if you have strong founders who are able to pivot to a better idea or pivot their way to a larger market. And I've seen now multiple companies completely reinvent themselves. And some of them are our most successful portfolio companies that have been able to execute on small or large pivots, but they had great founders at the helm. And in many of those cases, that was the reason why we invested, was because we found the founder so compelling. So I know that's like a softer measurement, but
No, I think
I
it's
think there's
it's
a lot.
totally fair. We've had awesome founders that, were invested in years ago and have totally pivoted given the dynamics and changes, and now they're crushing it doing something that's 170 degrees of versus what they were doing before. What are some of the deals that you've been a part of over the past couple of years at Arrington that you're most excited about that have either already come to fruition to some extent through a mainnet or are to come?
We have a ton. Like in terms of recent token launches that we've had this year, I'm really excited about all the progress that the Redstone guys have made. I think the Space and Time founders are killing it with all of the traction that they've built and their technological achievements as well. I think we've made some really interesting earlier stage bets. Like in the space, there's a company called Rilla that I'm really excited for. Those guys are doing some awesome things for the streaming space, and it's desperately needed. We've made a couple investments recently into the DeFi Development Corp, or DFDV, and Nakamoto, which merged with Kindly. Those are two crypto treasury companies, and they've been executing fantastically. In the case of DFDV, I loved the management team. They had a very compelling plan for what they were going to do, but the execution has been even better than I expected. Those guys have been able to acquire Sol at prices below market. They timed their buys very well. They've proven themselves capable at raising additional capital, and their validator business is very compelling. And I think it's going to be a real asset for the company long term. Similarly, with the Nakamoto and Kindly guys, I mean, that management team is just off the charts, and I'm really excited to see what they're going to do. I'm already seeing some early signs that that's going to be a big winner as well in the long term. So super excited about all of those, and there are a bunch more companies as well. Like I'm really excited about our companies that are launching in like newer ecosystems like a Hyperliquid and Monad. We have like aPriori launching liquid staking and Monad. I think they're going to be a really dominant force over there. We've got Hyperdrive. They're launching, well, probably in a week or two as of the time that we're recording this.
Colton, what makes you excited about some of the projects that you've invested in these more emerging ecosystems, and how have you picked those ecosystems?
Yeah, that's a good question. I think part of our thesis on like emerging ecosystems is we think that DeFi is really important to any new ecosystem that takes off. And so we want to be in the most important core primitives in those ecosystems. In the case of Hyperliquid, their success has been just incredible to watch. And they have done it all organically. Nobody knew that they were going to get a massive airdrop, and everybody kept using the protocol after the airdrop happened. So that's how you really know that the users there are they're loyal, they're going to be there for the long term, and they're actually getting real value out of the product. And the Hyper EVM, I think, is just going to be an extension of that success. And so we were looking for teams that were going to be early to that ecosystem, that were going to provide that critical infrastructure. And we found a seasoned team that had experience launching very successful DeFi protocols in the past that was working on those problems. And so the investment just made a lot of sense. In the case of aPriori, that was actually a pivot. That was a great founder who we thought had a really good initial idea that was in a different ecosystem. And then he recognized the opportunity that Monad presented with the massive amount of capital that they were able to raise and the tremendous amount of traction that they had on testnet. And he was able to build a great product that's now one of the top products on their testnet. So I think we came about those investments in different ways, but they sort of follow the same through line of crypto is going to see new technology and new chains launch that make user experiences better. We're going to need DeFi and financial plumbing for those ecosystems to succeed. And so we want to back those teams.
Do you think that the DeFi investment continues at the same pace it has for the past couple of years, or do you think things move over towards more uh, TradFi stuff, TradFi related stuff, commodities, RWAs, that sort of stuff as new people come in that through those paths?
We've already seen a lot shift over. And I do think that back in the last run in 21, there was way too much funding that went into DeFi because there were tons of new chains that were being launched. People were basically copy and pasting the same primitives over and over again, and there wasn't a need for it. And I think that we don't need an infinite number of DeFi protocols. There's going to be some amount of consolidation that happens, and the amount of funding flowing into the space will reflect that. I don't think that means it's going to zero or that I'm bearish on it at all. I just think that the level of selectiveness and the standards for those kinds of investments is going up. And that's a good thing. It shows that the space is maturing and we don't have a bunch of monkeys throwing darts at the board and continuing to make money with that investment strategy. I do think we've already seen a bunch of projects raise for the commodities angle. We've seen them raise for the stocks angle, a tokenization of real world assets. I think that'll continue. We'll also see a consolidation over there, and maybe it'll go through the same kind of phase as DeFi 1.0 and 2.0 had to go through, where there's a lot of new startups and then some of them win and some of them don't. But I do think that crypto is going to be a lasting piece of the financial infrastructure, and it's going to become more and more important, especially with the regulatory changes that we're seeing happening right now.
Yeah, let's talk about that for a minute. You're like a hair younger than I am, having gone through college over the past several years, worked at a larger company, had your own startup, and now where you're at. What's your take on the regulatory environment? What's your take on crypto in America? You've also, I know you've lived in red cities, blue cities, purple cities, so I think you've got an interesting take there, being the age that you are.
I think if there was ever a time for crypto to really succeed in America, it's now. We're already seeing a bunch of people that I'm meeting internationally talk about how they want to come to America. I've seen many, both funds and founders applying for more O1 visas than I'd seen any time in the past. So it's really great to see. I think before the election, there was this sense that everybody was afraid to do anything that had anything to do with America. They wanted to distance themselves. Founders didn't want people to know that they were American. Everything had to be offshore, buttoned up, couldn't touch US users. And I had that same fear too. The launching a token carried an immense amount of legal liability as well, just because of the amount of uncertainty and what you would see happen to other projects that if they had any amount of success, they were going to get sued. And so I think that led many of us to not launch tokens or delay tokens. So it really impacted decision making, and it also impacted funding because it was really hard to raise more money if investors were like, well, your passport is a massive liability. And I was told that on multiple occasions. So it's really been a true 180 in the past few months, where now it's the complete opposite. Like the US is now one of the most welcoming places for crypto. The government actively wants builders to build here and to do it in America, I think is the much better approach, because why would you want this new promising technology that is going to have a really big impact on the financial system to be controlled by foreign governments? And I think the other interesting thing is you're seeing Europe accelerate in the opposite direction right now. And I think there will be a big exodus of Europeans to places like America and Dubai and to some extent to Singapore to try and escape that. And I think that'll be the story of the next 4 years, is the exodus of crypto from Europe to America and the East. And it'll be interesting to see how China responds to that, because they've always had a heavy hand on it, but it is an important market.
What's your predictions for what the back half of this year looks like? What are we looking at for the rest of 2025 in terms of where people are investing, how much they're investing, who we're bringing in new to the ecosystem? Tell us a little bit about your predictions for the rest of the year.
Yeah. So I think the summer is actually going to be a bit slower than people expect, even if we do have an alt run. And the reason why I think that is because I think venture funds are still going to be raising money. We're really fortunate to be in a position where we're basically always investing at Arrington. Not all funds have that privilege. And when I was in Dubai recently, I talked with more venture funds that were raising than companies that were raising. So I think that'll take some time. If we do see valuations increase, investors' returns are going to improve and it's going to be easier for them to raise money because they'll be able to show some DPI. And that means that we'd be set up pretty well for a lot of investment to flow into the space by the end of the year if they're able to close those funds this summer. I don't necessarily think that's going to be, depending on how the cycle plays out, whether that's going to be the best for their returns. But I think that's probably what will end up happening. It seems like we're set up really well for an alt run. If we get the monetary and fiscal relief that we think is coming, it's going to be great across the board for both large caps and small caps. So I'm very bullish for the next half of the year. I think there's going to be a lot of progress both on the liquid and on the venture side. And I think that the venture investments, they'll probably heat up closer to the end of the year because they also tend to lag public valuations. Like if tokens go up, there's still a bit of a lag between when those venture valuations move up to match and reflect that. And it happens in the opposite direction too. I think at the beginning of this year, as alts fell, there was a slower movement for venture valuations to come down. And now I think they are lower.
What do you think about projects that go to mainnet or launch a token for the rest of this year?
I think that projects shouldn't worry too much about timing their token launch. And I think that most of the good ones are going to succeed regardless. And in some cases, launching your token at the Pico top is actually a real liability. So I think launching a token now is a great idea. I think we're set up for a really good run over the next year, and you'll be able to benefit from that. You're not launching at the very bottom either, so you don't have to worry about petering out and there being no interest. But yeah, I think the worst, actually, the two worst case scenarios is you launch at the very top, which nobody knows when that's going to be. Anybody who tells you they know exactly when it is, if they're right, they were just lucky. You can get close, but you're never going to know for sure. If you launch it at the top and you have down only price action, people are going to hate you because nobody made any money with your coin. You don't build a base of evangelists and a strong community around you that's going to carry you through a bear market. And we will have another bear market. It happens in traditional markets too. You'll never be in a situation where it's up only. And so you have to have a lot of loyalists who got in at a lower cost basis who are going to stick with you. And if you look at the most successful communities that have endured until now, it's not the ones that launched at the top in 2021. It's the ones that launched in 2019 and 2020 that were able to take everybody with them. And those are the projects that are still around today. Like Solana is a great example of that. The Chainlink community is still very strong. There's a number of projects like this that I think timed it really well by actually launching low. Right now, I think you're sort of getting a mix of good valuation. You're not starting out at a terrible price, but there's plenty of room to run. So I think now is a good time as much as ever.
Speaking of now as being an interesting time to sort of be alive here, I know you're involved in a few different schools and you've spoken at different university programs. What's your take on students coming out of, let's say, American universities right now? What's career advice you would give someone looking to get into Web3? If the funding lag, university teaching and onboarding and acceptance of crypto is even further behind that.
Yeah.
So what would your advice be to someone looking to get into this, either as a founder, go to a big company, join a fund? What would you tell someone?
Well, it depends on your situation, what you're looking for, obviously. I don't think there's anything wrong if you have a great offer at a big company to go there for a short period and learn as much as you can. I think the worst thing you can do though is go to a big company where you're not interested in what you're doing and you're just going there because of the name. And you'll probably feel like you wasted a few years doing boring stuff. And then it'll be hard to leave because they'll He's paying you like a better salary than what you'd make going to a startup and doing something more interesting. If you do pick a startup, I would say the most important thing is making sure that the person who you're working for, you really admire and you think is really smart and that you're going to learn a lot from. And to be honest, that's probably the same advice for the big company as well. It's more important who you're working for than like directly than what the company is named or who's backing
Do you,
them.
do you think that we'll see more students be amenable to entering directly into the Web3 decentralized technology out of the gate from school?
Right now, I think all of the hype is still around AI. So I'm not seeing the same kind of interest in crypto that I did probably in 2021 or 22. I think that'll probably change if crypto keeps going back up. I think a lot of it also just depends on the amount of funding that there is, because that determines how many startups there are and how much demands there is to hire people. I do think that means it's a good opportunity if you're able to get into an industry sort of at a point where there's still a lot of potential for growth, but it's not as hyped up. You'll be able to get more ownership and more responsibility earlier on, and you'll be positioned, I think better than if you go into something that's super crowded. And I think that, while a lot of people would argue, well, crypto is very risky and AI is a safer bet, there's a lot of like ChatGPT wrappers that are just going to go up in flames. And that's what most of these AI startups are. So you're taking a comparable, if not larger risk going to an AI startup than a crypto startup that's doing something innovative.
There you go, everyone. The reason for crypto over AI. It's great.
So that's not to say you can't have success doing either, though. And I think the thing that you should really optimize is finding somebody really intelligent to work for, who you're going to learn a lot from, and that the peers that you're working with you also really enjoy, because that's who you're going to be spending all of your time with.
That's great. I know this turned into a little bit of a career advice, but this is about a promotion in your career, Colton. So I'm glad we're focusing on it, and I couldn't agree more. And there's nowhere else I would rather be than this space right now at this time. I think it's a fantastic place to be. One last question as we wrap up. What's the best thing that Michael Arrington has taught you in the time you've worked for him? Speaking of working for smart people.
I think the whole founder focus of Arrington Capital comes from Mike and him being a founder himself. And I think that was something, as soon as I got here, he started hammering into my head. And now I've bought it hook, line, and sinker, um, because I've seen examples of that play out. But I think that comes from the top, our attitude of putting founders first, making sure that we're supportive of our founders, and also picking deals based on the founders and the quality of the team. That's always one of the things that he asks during diligence. It's always one of the first questions is, okay, let's talk about the team. Why are they the right people? Why do you like them? Why do you think they're going to be winners? And I think that's one of the most important investing lessons you can learn in venture. And so that's probably the most important thing that he's taught me.
100% agree with that. All right, well, awesome. Colton, thank you for joining us today. Looking forward to having you back on here a little more frequently and having you host some of our founders in the future. But thank you and congratulations.
Thank you. Looking forward to it.